If there was to be a surprise, if there is to be a surprise tomorrow, where might that surprise come from?
Well, I think the first thing to say is that we're not expecting a surprise, like most people. I guess people might be looking for some indication on how they wind back the QE program, and also looking for some indication on how long rates will stay low. So, as ever, people are going to be combing through the text for any significant words or phrases that they can...
Monitoring exchange rate volatility was in last month. The euro's come down since. Are European companies weathering the euro, we'll call it the euro storm, or not?
Well, look, I mean, there are very few companies that manufacture wholly in euros and then export to other countries. Broadly speaking, people balance their manufacture and sales, so there's a translation effect on earnings, and people have been a little bit concerned about that. And I think it was interesting that the fourth quarter earnings season, while it was a beat, didn't actually lead to net earnings upgrades for Europe, so suggesting that currency strength has held back or tempered the enthusiasm of corporate management just a little bit. But I think, you know, overall, as long as the exchange rate appreciates steadily and slowly, then it's not that much of a concern for most European companies. The other point about exchange rate appreciation, of course, is that it bears down on inflation. So there is a kind of an inflation pass-through effect, which the ECB, they will be sensitive to that.
Right, so what is your prognostication for the European economy, Stephen, and for the ECB?
Vonnie, we think that the European economy continues to grow slightly above trend. I think the pace of growth may decelerate a little bit in the first half of this year. But, you know, we don't see any reason to suppose that there is anything sinister out there about that rate of deceleration. I think there has been some inventory building that's gone on, and that may come back a little bit. But if you think about the building blocks of the economy, from a government expenditure point of view, that's sort of modestly positive. Consumption looks positive, unemployment coming down, real incomes are rising, capex is rising, corporate confidence appears to be good. And as long as the growth rates of the rest of the world remain strong, then there's going to be an export tailwind to European growth as well. So I think, you know, the picture is broadly constructive, and it underpins an expectation we have that earnings will grow by, 10% this year.